What's going on, beautiful people? It's Joe, aka the Nomad Investor, where dividends freedom anywhere is the goal. Today, we are back with another portfolio update as usual, and it's the last day of the month. So I'm going to be showing you guys how the portfolio overall did and things that I have changed and etc. So without further ado, if you are new here, please make sure to smash the subscribe button. It goes a long way, helps with the algorithm, and most importantly, it helps keep me motivated to continue making videos like this. Now, without further ado, let's hop into things. As usual, the videos on this channel are for informational, entertainment, and educational purposes only. I am not a financial professional or advisor, and nothing here should be taken as financial, investment, or tax advice. Investing always carries risk, and those seeking advice should seek out a registered professional. Let's hop over here into the game plan and goal for growing my small portfolio from $0 to $1,000 per month in dividend income. So I have two sources of income. One is remote work income, pretty stable, pretty consistent, and the other is business income. It fluctuates, it goes up and down depending on the seasonality of things, but I have committed to investing no less than $300 a month, all the way up to more per month into my RoundHill taxable brokerage. And the thing that I'm doing is I'm treating this brokerage like a business, aiming for 30% plus high yield. And I'm achieving this through investing into high yield income ETFs, such as the following, but not limited to WPAY, HOW, QDTE, XDTE, XPay, blocks, and etc. Now, I am aiming for a maximum of 5 positions just because of my account size, and I'm alternating between anchors and satellite ETFs. This follows the core satellite investing strategy, investing approach. I personally learned this from a YouTuber by the name of Eugene Vasquez, but it's something that's been around for quite some time. Now, I'm going to be taking the dividends that get paid out on a weekly basis because I mostly invest in weekly dividend income ETFs. And I'm either going to be dripping them or stacking dividends to purchase when the market is down. Now, more recently, I have decided to just focus primarily on stacking dividends because of the way that these ETFs have been performing. But if this was a more traditional ETF that I was investing into, I'd probably just set automatic drip on, to be honest. But drip plus always compounding is the portfolio growth strategy. I'm going to be rinse and repeating this until the account hits $1,000 a month in dividend income. And again, none of this is financial advice, and this is for entertainment purposes only. These are my dividend income milestones while I grow my small portfolio. And for those of you who are new, this is basically so I can celebrate my small wins leading up to the bigger goal along the way. We have the first goal and the second goal already changing color, which means we've achieved these. And we were so close this month to reaching the third goal of $300 a month. But if you want to see all the milestones that we're going to be tracking leading up to the ultimate goal here, you can pause this and take a look at it. Now, as I kind of explained in my last video, not so cohesively, but I'm kind of getting the grasp of this. This is my new possible strategy for the bear market. So basically, I'm looking to diversify a bit and just hold some different positions that are more focused on growth and stability. So I have broken it down into allocations. So the first 50% allocation will be focused on high yield income ETFs, such as things like HOW, NVDW, WPAY, blocks, GLDW, and more. These are ETFs that I believe aren't going anywhere, and this will allow me to continue increasing my share sizes for each position. The next 20% allocation will be into growth ETFs. I'm personally going to be investing into VGT. This is what I hold in my retirement accounts. I personally like it. And for growth ETFs, because of the size of my portfolio, I just want to focus on one, and this is a good one in my personal opinion. The next allocation will be 10% allocation into stable NAV index ETFs. These are things like QQQI, XPay, KQQQ, and I do have to bring up EGGY. Shout out to my guy Eugene. He recommended that to me. And I also believe I recently saw Alex, 9 to 5 to Freedom. He also mentioned that he holds EGGY, so that's something that I'm currently looking into as well. But me personally, I'm stuck between those three, QQQI, XPay, and EGGY. And then the last 10% will be an allocation into bonds, which I'm personally looking at SGov. The reason I would be doing this is I don't want just cash sitting in the account, especially if I decide to utilize margin. By me investing the remaining 50% into these 3 different types of funds, and according to these allocations, I believe that it will be able to hold up my portfolio should we enter into a bear market, especially with these high yield income ETFs. If you guys have been following my channel long enough, you know I have been investing into 1.2x exposure funds. And let's just say when the green days are here, we are looking amazing. But when the red days are here, we are not looking good at all. So in a bear market, these positions probably will be tanking and tanking terribly. Minus blocks, of course. I think that could be an exception to the rule because of the way that they manage it. Moving on into the portfolio. You know what? Yesterday was brutal, guys. I'm not going to lie to you. But on my X account, I posted a screenshot of us being down like 5% on this portfolio. It was pretty brutal, but we did have a recovery, which is nice. So you guys can see this. After hours, the market did recover quite a bit. And I did miss out on an opportunity to invest more into WPAY because it did go around, I think, the $52 a share mark. But we are at $5,131.51. So we have increased in value. We are up 10% for this past week and 3.8% so far pre-market. It's currently Friday, October 31st, around 6:30 in the morning Eastern time. As you can see, our buying power has also increased. We are at a 52.78% margin buffer, and we are $2,683.07 above our margin buffer as well. Yeah, our buying power is $2,674.27. Our margin total has increased as well. So it's currently $5,254.28. So that's cool. Margin use has also gone down to $2,580.01. And basically, I just deposited some money to pay down some of the margin because I did get paid from the remote work and some of the business funds as well. So let's take a look into each position. First things first, WPAY, it's at $54.05 a share. We are currently at a market value of $3,840.76. We are up $62.58, so a little bit less than yesterday's update, and which translates to 1.66%. Our average cost per share is $53.17, still sitting at that 71 shares and a portfolio diversity of 49.81% with a maintenance ratio of 30%, so nothing has changed there. For HOW, we are sitting at $72.90 a share with a market value of $2,260.31. We're up $144.92 or 6.85%. Our average cost per share is $68.23. We have 31 shares and a 29.31% portfolio diversity with a 30% maintenance ratio. And last but definitely not least, NVDW is at $51.95 per share. Our market value is $1,610.45. We are up $202.16 or 14.35%. Our average cost is $45.43 a share with 31 shares still and a portfolio diversity of 20.88% and a maintenance ratio of 30% as well. So across the board, we are in the green. We are looking good. Our portfolio allocations are okay, but our total returns are in the positive, and that's the most important part for now. So we did survive yesterday, thank goodness. But one thing that I did want to briefly touch on before I get into the investing journal, the dividend sheet, and some news that I'm going to be talking about, discussing RoundHill, KYLD, and some more. Let's hop over here real quick into GLDW. So, of course, like I mentioned, I have not been able to invest into this fund. It's currently a 100% maintenance ratio, and I haven't paid off my margin yet. So, unfortunately, I'm missing out on this opportunity, but it is what it is. That's just part of the game. As you can see, it did release yesterday. It did launch yesterday. And naturally, due to the dip in the market, this thing made some moves. Now, nothing too dramatic. You know, it launched at that, looks like on here, it started around $50.89. And then it got all the way up to $51.34. So 0.84% up. This is definitely a position I would love to get into. Part of my 50% allocation would actually contribute to this as well. So this would be a nice position to balance the portfolio. And one thing I did want to know, I recently discovered that this fund most likely will not be included in WPAY's holdings. And I'll explain why later, but I just wanted to share that with you guys. Now, if we look into GDXW, pretty similar, but it did actually more. So it was up 3.31%. So again, this is something I haven't been able to invest into. I'm personally more interested in GLDW, but I could consider looking into this potentially. We'll see. But yeah, it's at 100% maintenance ratio, so there's no investing into that for now. And yeah, let's hop over into the investing journal. All right, so for those of you who are new, this is my investing journal. This is where I've been tracking my 0 to 1,000 a month dividend journey and logging each and every entry. For instance, I started this account back in August 19, 2025 with a net account value of $678.67. The time I had Alti, XDTE, and YBTC. Obviously today I don't have any of those positions, but yeah, let's hop into today. So it's the end of the month, and as of this pre-market recording, we are at a net account value of that $5,131.51. But with the included margin positions, we are at $7,711.52. All right. With the monthly contributions, it has increased. And yeah, let's get rid of this because that's the final number, but $2,650.16. The margin has decreased to this amount, if I remember correctly. Is that correct? Yeah, that's correct. And then these are the dividends that we got paid out for the whole entire month of October, $282.14. We got so close, like I mentioned, to that $300 a month, but unfortunately we didn't hit it, and that's okay. Possibly this next month, we shall see. Now, hopping over here into the dividend sheet, one thing to be mindful of, like I like to usually say, this doesn't pull in data all hours of the market. So it doesn't pull pre-market, it doesn't pull after hours, it only pulls the market open. So whatever the market closed at, that would be the numbers that it stays at. So as you can see for WPAY, for instance, the market closed at $52.73. It has not updated despite it recovering after hours. But one thing that I like to only really focus on and take a look at is the total return and market return. For total return, HOW is up 8.83% on the sheet, but of course that's more than that. For WPAY, it's 2.80%, and for NVDW, it's 14.13%. For market return, it's looking at 3.45% before this is updated. For HOW, for WPAY, it's down 0.90%, so almost 1%. And for NVDW, it's 12.16%. Now, if we hop over here into the dividend log, this is where I'm logging every single dividend I've received for each position. And I even include where the dividends positions that I've sold already, okay? But for the entire year so far, we are at $316.31. Not much has changed since the last update. If you guys are curious, this is how much I've made from WPAY, HOW, and NVDW in dividends. If you guys want to see, you can pause this. This is all the positions I've sold, the dates that I've sold them, how much, etc. So yeah, go take a look at that. So yeah, as you guys know, yesterday the market took a massive sell-off, a massive pullback. I mean, not massive, it was like 5%, but that's pretty big in the stock market. This is one of the reasons why Meta stock faces massive sell-off after Q3 earnings miss. Now, a lot of people are actually shocked by this, but here's exactly what happened. So it says Meta shares fell about 7% on early Thursday after the social media company reported weaker earnings due to a one-time tax-related charge, even as quarterly revenue exceeded expectations. So again, their earnings technically exceeded their expectations for the quarter, but due to that taxes that they had to pay, which, for that one-time tax-related charge, unfortunately, they missed the mark. Now, it says the company booked a $16 billion charge tied to a recently enacted U.S. tax bill, which weighed on the bottom line. Net income for the 3 months ended September 30th dropped to $2.71 billion or $1.05 per share from $15.69 billion or $6.03 per share a year earlier. Meta said earnings would have been stronger without the charge. Revenue climbed 26% to $51.56 billion. Basically, ad impressions rose 14%, while the average price per ad increased by 10%. And daily active people across Meta's apps reached 3.54 billion in September, which was up 8%. That's one of the reasons, but it's not the only one. Now, hopping into X, something interesting happened. So I saw this on X, and this was interesting. It says, breaking news. The U.S. Senate just voted 51-47 to end all of President Donald Trump's global tariffs. This is getting out of hand. Now, if this is true, if they ended all of his tariffs, of President Trump's tariffs, I think we could see a potential rally. But I think we might even see another red day today. That's just my personal opinion and speculation. But this was interesting. I did want to share this. Let's hop into WPAY. So like I mentioned about GLDW and GDXW, I do not believe that they will be included in WPAY's holdings. And here's why. It says, what WeeklyPay ETFs are eligible for inclusion within WPAY? All WeeklyPay ETFs within their underlying asset based on a single stock will be eligible. WeeklyPay ETFs with exposure to indices, fixed income, commodities, or ETFs thereof will not be eligible. So we take into consideration that GLDW and GDXW are considered commodities. I think it's safe to say it's not going to be included. And this is based on what we found on RoundHill's website. These are the ones that are classified as single stocks. So all of these will be included within WPAY's holdings. As you can see, it says gold. So these are commodities, both of them. So I just wanted to communicate that because I think previously I mentioned it would be. So I just wanted to clarify. All right. Now hopping into HOW, the distribution rate has increased. We love to see it. It's 92.97%. We can see that we are going to be getting $1.26 a share in distributions. So I'm really looking forward to that. And hopping into, NVDW, it's currently at a 49.66% distribution. So a little bit less than what I was expecting, but it is what it is. At least we're getting that uncapped upside. So hopping here, we're going to be receiving 48 cents per share for the next distribution of NVDW. So I wanted to share those two. And moving on to GLDW, there is still no distribution announcement. Just wanted to make you guys aware. But it looks like there's going to be a declaration on the 7th of November. Now hopping into X, we're checking out a post by Richie B or at Wannabe Fresh. He says, I'm thinking this sell-off over the past 2 hours is more of a convergence rather than from a big headline. Potential catalyst. Techs getting hit hard as mega caps like Meta and Microsoft slide on weaker guidance and heavy AI spending. Money's rotating out of growth and into defensive names. This is true. Add in the Fed's rate cuts aren't locked in tone and risk appetite tightened fast. It's not a crash, so I don't believe there should be any panicking. It's just the market taking a breather after running hot. Smart investor use these moments to reassess and not overreact. These are excellent buying opportunities. So that's what he said yesterday around 3:35 p.m. Eastern time. Yeah, so I didn't read this until later in the day, but I felt relieved after reading it because that was kind of the conclusion that I came to. It's like, hey, don't panic. You know, you've chosen your positions for a reason, not just because they're paying high income, but because they're associated with positions that I personally have high conviction in. I know they will continue to perform well. They've just been honestly hitting new highs, all-time highs. And it's okay to have a correction. And there's a lot of events going on right now that have contributed towards the way that the market is assessing. But I still do want to say, everybody, and this is not financial advice, but be vigilant. Keep an eye on your portfolio. Keep an eye on the markets. Keep an eye on the news. It's very important. Now, moving on to another post by Richie B. He said, what makes this Alti release interesting is its timing. It's launching as the market is coming off a dip, not entering one. Historically, these ETFs that debut at the start of a downtrend tend to struggle early, but with the market showing more clarity, tariff tensions easing, confirmed rate cuts, and improving sentiment, this could quietly become a strong income-focused play heading into a potential Santa rally that never happened last year. Beautiful timing, Rex shares. So yeah, that's what he says about Alti. I don't know if it's perfect timing or not. I don't even know how this Alti with an I is going to perform, but I will say this, Rex shares does have a good track record. And to be honest, I think it's going to perform better than Alti with a Y. But how will it perform over the course of its inception? I have no idea. It's to be determined. So I will be taking a close look and eye on this. Now, moving into a different X post by High Yield Hustle, it says, how will RoundHill weekly funds do in a correction? This is something I have been talking about quite a bit. I mentioned earlier, it's a big reason why I'm talking about my bear market strategy. How will down markets affect WPAY? We've actually already seen the answer. Here it says, there are multiple examples to use here, but the best is NVDW. NVDW launched at the worst time possible, right during the worst of the tariff crash. It opened at $49.84 and quickly bottomed 2 months later at $26.88. As you can see, 1.2x leverage works both ways. What followed was more than a full recovery up to $53.42 in August. If you were in at inception, your capital is up, but you also harvested that massive dividend yield along the way. If you timed your entry, you not only harvested that dividend, but nearly doubled your capital. It's amazing. So what happened to the dividends? Of course, a decreased share price hurts the payment and amount of money that could be distributed. With that said, only 3 weeks hit sub 20 cents a share, and in the grand scheme now appears to be outliers, which is also very true. So how do you counter this? The most important thing you need is patience. These funds will always come back to the price you want them at. Don't FOMO and buy the top. Instead, look for opportunities with more value, stack cash, and execute when that fund hits your buy target. Reinvest only below your cost basis. If one of my holdings runs, then cool. I'll enjoy the green and stack cash, or buy a fund with more value. If I want more shares, I'll wait for it to come back to my target, to my buy target, before I consider reinvestment. These funds are clearly capable of full recovery, but the beauty of combining time in the market with timing the market is that you don't need full recovery for massive gains. For example, I didn't buy TSLW until $30. It has not recovered its inception price yet due to my entry at the current $39. I'm up big on capital. I do not see these funds as set and forget like NEOS. They do take management to make the most of. Very, very true. With that being said, hands-on with them is very worth it, as few vehicles in this space will give you the type of gains these can. The people who don't make money in high yield got poor entries and chased hype. Yeah, that's something very important, guys. I really do also agree with this a lot. You do have to pay close attention to these 1.2x or even more exposure funds, but I'm going to talk about RoundHill in particular because of the post here and because of what I hold. You do have to pay close attention to them. And this is a big reason why I've turned off drip, like I mentioned in previous videos, like I mentioned earlier. And I decided to kind of stack cash and only invest when it's either below my average cost per share to accumulate more shares, or into another fund entirely that there's an opportunity because the value is there. All right. So just keep that in mind. And again, none of this is financial advice. This is just strictly opinion. Now, last but definitely not least, we're going to talk about KYLD. It is officially releasing today. Now, of course, it's pre-market, so you can't buy it currently. But as soon as the market opens at 9:30, we shall see how this performs. It says it offers recurring income stream to shareholders. You gain exposure to a portfolio of high growth securities. There's a tax advantage, so option premiums may not be immediately taxed and therefore has the potential to offset short-term tax liabilities. I'm not a financial advisor. This is just what it says on the site. And it says curve high income ETF seeks to provide high income. The distributions are going to be paid out weekly for this, which we love to see. Now, if we look at the holdings, there's nothing yet, but this is subject to change, of course. That's all that we have for now with this fund. Not too much, but I did want to show you that it is on Robinhood right now. Of course, it's showing $0 because it's not live yet, but this is something I'm paying attention to. And let me add it actually to my weekly watch list. I know this was a long one. I had a lot to cover. There was a lot of things that I needed to share with you guys, a lot of news. Anyways, guys, that's it for today's portfolio updates. I really hope you enjoyed that along with everything else that I shared. But if you guys are new here and you haven't already, please smash that subscribe button. And most importantly, for everyone watching this video, smash that like button. It really does help with the algorithm and go a long way. Most importantly, if you have any comments, questions, suggestions, or feedback, comment them down below. I would really appreciate that. And until next time, guys, peace.